Today, I'm going to introduce you to one of the most powerful trading signals you will ever hear. This signal was responsible for my first 100,000 in trading profits while I was working a full-time job in Germany. If applied correctly, this pattern has 90% win rate. This is the type of pattern that can answer all of your questions. When it's time to buy, when it's time to sell, when it's time to go all in with confidence, and when it's time to wait the markets to come to you. And it has nothing to do with chart voodoo, indicators, drawing lines, connecting dots on the chart. It's very simple, but yet very powerful. I realized I've been using technical analysis all wrong. I've been missing vital steps, and I realized that the difference between a struggling trader and a professional 6-7 figure trader is razor thin. But today, that struggling trader, that won't be you anymore. I'm about to share with you the steps that I'm using to identify this powerful pattern and show you why is it so effective. By the end of this video, you will see it's the stock market and technical analysis in a completely different way. You will finally be in the driver's seat and be in control of the market instead of the market being in control of you. So let's go ahead and see how that bull's takeover pattern looks like. I'm following a very specific 4 steps top-down approach. Imagine that as a recipe, and if you skip one of the steps, it's like removing some of the ingredients. It's not going to work the same. So you want to understand each step in depth. This is why I'm going to show you each step in detail and show you plenty of examples on the chart so that you know what exactly to look for and why everything works so well with this approach. Step number 1, an extremely important step where I see unfortunately a lot of the traders miss and don't even do, is money flow. At any time, you must know where is the money flowing, what is the hot sector, what's going on with the interest rate. So you must be on your game if you want to know when it's time to go all in and risk more of your capital. This is going to dictate everything else, what we're going to do after that. This is because it's going to tell you, is it time to risk more or is it time to sit still? And so let's go ahead and see how that looks like on the chart. For our example, I am going to use here the QQQ. It works the same with the S&P 500. So you want to determine the overall phase on the market and what are the hot sectors. So you want to know as well when it's time to risk more and when it's time to sit still and let the market come to you. As you can see here in the past, every time the market goes into an oversold zone, it bounces back, but it does not only bounce back, it bounces back huge. So what you're looking at, you want to see that the market is dropping for a few days in a row, and in a perfect world that it is going into some kind of an oversold area. You must know your edge. When I trade the S&P 500 or the Nasdaq, I know that my edge, my advantage is on the long side. I know that the market goes 90% of the time to the upside, and I know that over time I'm always going to make money if I just focus even just on the market and no individual stocks. So I'm looking for decent decline of a few red days that gives me the idea that I'm going to have a good risk versus reward. So if you bought here, for example, it bounced huge and went into a very strong new uptrend. When the market starts showing some signs of a low momentum, more sellers stepping in, failed breakouts, failed bounces. Here, for example, you see the market is trying to break out, but it's followed by one red candle. Then it's trying to bounce here off this short-term support or liquidity zone, and it's immediately followed by a red candle, which is called a failed bounce. So you don't want to be in this area. Again, you want to look for some decent declines. This is how you know that your edge is on your side, that you're going to see a huge bounce of this zone. In other words, you're trying to avoid cycles like distribution or a downtrend. So make sure you look for these few days in a row, because your risk if you enter here is going to be minimal, and your reward and the probability for the market to bounce off this zone is going to be high. You don't want to be buying breakouts, and you don't want to be looking for setups that are extremely extended. This is the step number one, determining when is the right time. And recently, this here was a great zone. This is a great zone. And in my opinion, we're still in a great zone here for potential long setups. There are plenty of nice looking growth stocks that are about to break out and setting up. And I'm going to show you exactly how to find them. Step number two is picking the right instrument. It's extremely important to know your edge. So if you're trading something like currencies, for example, you just have one currency against the other. You don't know your definite advantage. But if you're picking something like the stock market or tech stocks or some of these sectors that are extremely hot, you know that over time, especially the stock market in the US, is going to go up. So you have an advantage. And so what I like doing is picking a very, very strong growth stocks, because guess what? If I'm able to see that some of these stocks have strong KPIs, strong earnings per share, strong sales, more funds buying the stock, this is how I know that funds look at these numbers as well. And I want to be part of it. I want to flow with the funds. I don't want to trade something where I don't know is it going to go up or down. So step number two is finding the right growth stocks. And here are a few KPIs that I'm looking at so that I find these stocks before they break out. So what I like looking is earnings per share in percentage for last quarter, average 3 quarters of earnings per share. For how many quarters do we see earnings per share on the stock, and especially last 3 years growth rate, because any company can fake 1 quarter or 2 quarters, but very few companies are going to fake 3 years in a row. So this is why I really like looking at these numbers. I want to see how many consecutive years of annual earnings per share growth we have, how many sales percentage, 3-year sales growth rate. And I like looking as well at annual pre-tax margin, annual return on equity. Also, I'm looking at some other numbers like how many funds are actually buying the stock, and do we have increased fund ownership. Now, if you think this is too much, that's too complicated, I don't understand any of this, look, you don't have to be an expert on this. First of all, we're having also, by the way, a free report. This is from our report that we offer for free every single week. But you can just set up just a few KPIs and screen for these stocks without even looking too much in depth if you didn't want to. So how do you find these numbers and how do you screen for stocks like this? Chartmill, I really like that because you can screen for these stocks here. And as you can see, stock screener, you can decide what exactly you're looking at. So earnings per share growth for 1 year, you can say you want to see stocks with 20 to 80 earnings per share growth. Earnings per share 3 years, you can change that here as well, 10 to 45. Play around with it. I looking for 10 to 20 growth rate, for example. That's for me somewhat decent, but make sure you don't have like overly huge growth, because you know you want to be realistic. And this is what you're going to see here underneath. So you're going to see some of the stocks that you already know. For example, Meta, I know CRR. And if you click on one of them, you can see some of the details. You can see a little bit of an explanation, what is the company doing. And if you click on fundamental analysis, you can see here the profitability of the company. I personally like scrolling further down to growth, and I'm looking at these numbers. You get earnings per share 1 year, 128 growth, earnings per share 3 years, 15% growth over 5 years. So the health is 7 out of 10. This is pretty good. And you see here also a little bit of a summary. Feel free to experiment with that. I'm not going to go in depth with this right now because this is probably a separate video for itself. And just to give you a little bit more of an insight, don't spend too much time with valuation, because most growth stocks will have extremely high, they will be overvalued, and we're looking still here for growth. The reason why we're looking for growth is because these stocks have huge momentum and you want to be able to capture these moves. So step number 3 is finding the right liquidity zones and the zones with the most reward and smallest risk. Remember, the secret sauce is in step number 1 and 2. You want to make sure that you're in the right cycle and phase in the right sector and you have the right growth stock before it explodes. This is how you're increasing extremely your probability for success, because everyone can draw lines on the chart, anyone can pick any instrument, so you want to have this advantage in your favor. The more advantage you have, the better. We're looking for some kind of a pullback area. I'm going to use here in our example NVIDIA, and don't worry, I'm going to give you a few more examples of some of the recent stocks that I picked, and so we can see how that exactly looks like. So we're looking in general for lows and highs on the chart. So as we can see here, this was low on the chart. This is recently the recent chart, the low, and this is as well the low. So these are your support areas, and that right here is the high of the chart, or resistance in other words. You can call them support and resistance. You can call them liquidity zones, which is one of these new terms. Whatever you want to call them, just remember these are areas where most of the institutional traders as well are accumulating positions or distributing their positions. This is why a lot of the times around these areas you will see reversals. So you want to be at the lower part of the range. Example, if that right here is our range, you see that, and this is the upper part of the range. Excuse me my ugly drawing. You want to be buying at the lower part of the range and selling at the upper part of the range. Right now, the stock already went here for a nice bull run. You don't want to be buying here at the top, because as we can see right now, it's making a red candle and it might reverse there, but you want to avoid these reversals. So you want to take these swings at a time, as much as you can of them. But remember, it's like a magnet. As soon as it hits some of these areas here, these resistance zones, it's going to try to reverse. More sellers are going to step in. So you see in this case, we see this is the step number 3, pretty much finding the support zones here on the chart. And in this case of NVIDIA, this was a nice support zone, which I, by the way, traded as well. I started my position, building my position here. Nice move, and I took partially profits here. Also, you need to define how long are you willing to hold your position. In these examples that I'm showing you here, because I'm swing trading, I'm holding these positions for some extended periods of time, because I don't want to sit in front of the chart and be glued at the chart all day long. I want my money to work for me. So this is why I'm holding some of them for a few days or even weeks. Potential profit taking zone, and you want to be buying here. Always imagine that, picture that as a box or as a range. You want to be buying at the lower part of the range and selling here, and not the other way around. Now let's go ahead and see what exact signals are we looking at, which is step number 4, finding the right signals and patterns. I'm going to stick with this example for a moment and show you a few more different charts. In this example, we saw that NVIDIA came all the way down here, touched that. And what I'm looking at, I have a rule, very basic rule, 3 to 5 days in a row red. Sometimes it might be more than 5, sometimes it could be 6, 7 days, or you can have in between a few red candlesticks. What we're looking in general is we're looking for some kind of a decline. Like in this example, you saw it touched here this resistance and went for a decline, and then once it hits support or the previous low on the chart, some important support zone, liquidity zone on the chart that we just discussed, we're looking for one first green candlestick. This could be bullish engulfing candlestick, this could be a candlestick with a wick on the bottom. All of this has the meaning that there are more buyers stepping in and about to start buying up the stock, and the stock is about to go higher and reverse to the upside. And that's what we're looking for a first sign that we're gonna get this type of a swing, so that we can capitalize for a few days on that stock. In this example, we had here 3 red days, actually 4 in between, 1 green candle, but 3 red days, 1 green candle. And as soon as the price starts to go above it, like in this example, this is our entry here. So stop loss can be placed just underneath, and the entry is just above that green candle. Profit taking area is always around the previous high of the upper part of the range. In this case here, if you are in that stock, I would potentially start looking to lock in some profits and realize some gains. So let's go ahead and see now some more examples so you don't think that I'm just cherry picking the best looking charts. Another decent stock that I've been watching, and it was on our free report, that has pretty good growth, is HIMS. This stock has been actually pretty bullish here, went for a little bit bigger downward move and then started accelerating, and you see here pretty good that it went into a distribution. Always when you start seeing big ranges, big candlesticks, a little more volatility kicking in, again, remember, you should stay away out of this phase. You don't want to be in this phase. You want it to come all the way down to some pretty good oversold zones, like in this example here, 30 RSI, and then start looking for some kind of a reversal. So in this case, I did not trade it here, but I saw it piqued my interest as it started to break out again, and it had here 2 reversal candlesticks. So the signal that I'm looking at is a pullback into a support liquidity zone. In this case, it happened. This here is our support zone. You can see that this was the small consolidation and breakout zone. It came down here and had a very nice doji candle. The confirmation happened the second candlestick. So this is that candlestick right here, which was the confirmation. The price went above it. So technically your entry would have been right here, and the stop loss can be placed just underneath. And as we can see, it had a very nice gap up, and it's trying to consolidate here around resistance, but I would personally hold it and target here the previous highs, because this is actually a cheap stock, still has plenty of potential to the upside. So again, you want to be looking for something like the next Nvidia, something that is still not known yet, because most of the stocks that we know already, like Nvidia, it's already made 1,000% move. It's great if you got it, but if you didn't, you're kind of late for that. So you can still buy some, but I would not expect like an extreme growth over the next a few years. This is why we're trying to capture some of these and find these that are not yet broken out and that have plenty of potential and room. And again, what we want to target is this zone and this zone. So remember, imagine this is a box. This is your upper part of the box, the lower part of the box. You want to be looking for an entries in this zone and for exits in this zone. You don't want to be buying highs. You don't want to be buying breakouts at the highs. So let's go ahead and check a few more examples. Another very decent looking growth stock that I also shared with you on the fundamentals, because it was on our list recently and we traded it in the past, was OSCR. This is a very nice growth stock, a lot of momentum here, gapped up on earnings. Gapping up on earnings usually means that there are more buyers interested stepping in based on their earnings. Pull back into this breakout zone. This was a very, very nice consolidation here, broke out again. And again, like most of the other stocks that we saw in the market, it went through some kind of a distribution and a little downtrend, but then it started to pick up again and broke out again. So this stock has pretty decent growth KPIs, and as I mentioned, it was on our list. It did not have the right setup. This is why it's so important to combine all ingredients together. Just the fundamentals are not enough, and you have to look for some good looking pullbacks into some potentially oversold areas. That's gonna be even perfect. And so in this case, it's going here slightly into the oversold. I was looking at that stock here. That was the idea of it, but it did not really happen. You see, it never went above the high of this green candlestick. So there was no trading signal here to enter the stock. And right now it's still not there yet. So I'm still waiting for that stock. This is why I'm showing it to you live, so you don't think I'm going to show you something hindsight. Right now, this looks pretty decent. One green candle. What I want to see is hopefully tomorrow or next week, we see it holding this zone and we see that the price goes above that high. This would be my entry in this case, and my stop loss will be placed here. And as you can see, we will have 2, 3, 3.5 hours, 3.5 times on my risk on this stock. This is why it's so crucial to know where to enter, where are the support zones, the lower part of the range, and where to exit. So again, you want to enter here and you want to look for some profit taking around this zone. You don't want to be entering breakouts that are not working. You want to have strong fundamentals and you want to have strong KPIs growth on the stock, and you want to be entering as low as you can around some support zones, looking for some signal that there are more buyers stepping in. Now, why are they buyers stepping in? Is because these green candles normally are showing you a sign that there are more and more buying orders, and if the stock keeps getting high, and if the stock keeps getting bought up even the next day, this is where you know this could be a potential reversal and can continue higher. So this is the whole idea. I hope this video helped you a little bit to understand how to define your overall edge, have more advantage, and how to find these growth stocks before they break out, what to look for, what zones, how to screen for these stocks. Leave me a comment if you want a detailed explanation about the growth KPIs. And by the way, if you're looking for these growth stocks, we're sending each week 2 free growth stocks. It's totally free on the weekly basis and an overall preparation for the market. Check out the link in the description. Thank you so much, and bye for now.